Hi, welcome to the market view for Wednesday, the 20th of August 2014. Starting off with the 30-minute chart, we actually had a sell signal that was filled yesterday. So things are looking up a bit here. We've got the market actually being filled from, well, the bar was at 6 a.m. and the market filled it just after 8 o'clock bar there. And prices then moving lower down to the scalp just before we saw the release of the CPI figures for the UK yesterday at 9:30 a.m. These were better than forecast, which means that there's less likelihood of interest rates rising, so the pound then moved down 30-40 pips, trying to come back against the psychological level of 166.50, and then continued on down. So a minimum of 20 pips yesterday on this one. Holding through the CPI is not a good idea, because had they have come out worse than forecast, then the market would have done, there was a chance that it would have done the opposite, and also the same amount to the upside as well. So then it would have ruined the actual profit on this trade. In the 60 minutes, same thing, except you would have had to get out with around the psychological level of 167, because this bar here, the 10 o'clock bar, is shows when the market actually saw the release of the news there. So the 60-minute chart is showing the sell signal as the 30-minute, and then prices moving lower thereafter. So this bar here completed at 9, and then this one completed at 10, which includes the CPI figures there. So the 60-minute, even though it looks like there's a profit on that one, you would have had to have come out. Well, in fact, on this one, I wasn't watching this one at the time, but I can tell you now, actually, what would have happened here is it wouldn't have been filled until after the news came out anyway. So this one is not valid, whereas the 30-minute chart was filled at between 7 and 7:30 and 8, and then moved down till 9:30, giving the profit there. So I was just trying to get acquainted with the times there, just to make sure that what time the bar completes, and the bar is complete when the time that's shown at the top left there. And in the daily chart, we can see the market trading down there, putting in a new low. So we're just going to wind the chart together a bit so we can see what we've got. And there you can see the market down towards the 165. It's about 165.50 area. This is just struggling to. Actually, it's 166 is the area that we're looking at here. 166.50 is the one below it. So the market sitting around there at the moment, just below it, and you can see there the major sort of low before the market started to move up, and then you also have this one here as well. So we've gone from looking at all of the highs at 170 all the way down to at the moment the 166 level there. In the news today, let's just have a quick look. We've got asset purchasing, the Monetary Policy Committee at that's at 9:30, and the official bank rate votes they're unchanged, so that shouldn't really move the market. Nothing else during the day really, and then at 7 p.m. this evening we got the FOMC decisions on what they're going to do in the US with regards to whether they should print more or not, as the case may be. So that's all we've got on the news front this morning. So fairly quiet news day. In the Dow yesterday, the market continues to move higher. We're seeing the lunacy continue, and we will need to go back to the recent high to get an idea of where the market is going to go to now. So let me just draw this in for you. So through the 62, through the resistance of yesterday, through the 76%, and this is the major 76% retracement for this market, which also coincides with a bit of resistance to the left there. You can see all of these other resistance areas. Keep in mind we've got the FOMC tonight, so we could see a big push to the upside in this market during this evening, late evening, around 7 p.m. So that's the Dow, the implied. Well, I've never seen anything like it. It's fallen off a cliff. It's down to 8.71, heading back to the 7.90, which I spoke about yesterday. And it's just a case of, let's see what happens. It's a very strange picture indeed. We didn't get the 100% increase in the implied, so maybe there is something afoot where the Dow is going to trade up to 17,000 in that sort of area, and then we're going to see the big sell-off from that point in the Dow at the moment, or the Dow implied is pointing at something like that, in my opinion. It looks like the lunatics have taken over the asylum again. There's no more risk in this market. It is an asset bubble, there's no doubts about that. It has been since 2009, March 2009 to be precise. So it's a case of watching and waiting for it to unfold. The long side's the best side at the moment, and no doubt it will be this evening, unless Yellen in a... well, I'll be polite, unless she actually says that interest rates are likely to go, which they're not based upon their CPI figures yesterday, which are an absolute joke of 0.1%. I don't understand the American people. I think there should be riots for the blatant manipulation of the inflation figures in the US. But it is what it is. So I don't think she'll be talking about increasing in interest rates, maybe tapering more of the QE, but we'll have to wait and see. Who knows? Who knows with these people anymore? So that's it for today. Let's see what the market has in store for today. And all things being equal, see you tomorrow. And as ever, thank you for your support and also for watching.